Hi all, this is Akshara Menon, analyst at PMS Bazaar. Of course, everyone knows our Indian stock markets are already at record high, and hence it's uncharted territory. Our economy is experiencing a Goldilocks effect where inflation is falling faster than expected, while growth is picking up its quicker pace. One of the trends which is visible in the market in recent weeks is like consistent sector rotation. Sectors like auto, FMGC, oil and gas, BFSI, capital goods, and even ITs have taken star sectors in last few weeks. To talk more about it, we have our expert for the day, Mr. Nishit Shah, the fund manager of Phillip Capital. Before giving the podium to him, let me have a brief about his experience. So he's a triple graduate with specialization in finance and management, 17 plus years of experience in Indian equity market and investment products. He has worked with some of the most respected wealth management companies in India, including Sushi Finance and Motilal Oswal. PMS strategies managed by him have constantly been awarded as one of the best performing in one in the industry. So over to you, sir.
Okay, thanks, Akshara, and thanks PMS Bazaar for this opportunity. Yeah, of course. Good evening to everyone, and I really appreciate for you to taking out time on a Friday evening and joining us on for this webinar. Thanks again. So what we'll try to keep this presentation as fluid as possible. We'll have I'll try to present few of our slides, what themes that we have. I'll also try to address the elephant in the room, and then of course we'll move on to question and answer session. Yeah. So, of course, nothing starts without a disclaimer. Please do read the disclaimer in detail. There are no assured returns or guarantee of returns. If I happen to talk about any stock or sector, please do consult your wealth manager or your financial advisor before making an informed decision. Yeah, so just to give you a brief about Phillip Capital as a group, okay? So we are more than 45 years company established in Singapore. Okay, we are spread across 16 countries globally. Yeah, so that way we are very large global behemoth. Right from US to Australia, we are there across all the countries. We are very strong on that Singapore, Japan, Hong Kong, Malaysia, yeah, Thailand, Cambodia. We are a bank as well. Yeah, so we are very strong in that region. But of course, we have got offices in US, Europe, Australia, everywhere. Here in India also, we have a presence of now more than 25 years. But many of you might not have heard about us. Yeah, maybe you might have heard about us, but you might not have maybe known about us. Okay, so we are very strong out here in India as well. We are basically we do business out here in India with only two set of investors. One is institutional clients. So you name any large FII, hedge funds, sovereign wealth funds, all other domestic fund houses like mutual funds, insurance companies, AIF, all of those, they do business with us. The second set of guys who do business with us is HNI. Again, in HNI, right from the largest of the HNIs to many discrete HNI clients like you do business with us. Having said that, this two set of investors also very demanding. Okay, so that's why we have got one of the largest research team out here in India. Okay, we have around 20-25 research analysts here in India, which is aptly supported by my global colleagues, which are based across all the countries. Okay, that way, of course, we manage huge AUM and AUC globally. We are close to around $47 billion under asset and custody globally. Yeah, and of course, more than 1.3 million clients globally, shareholder funds in excess of 1.5 billion. So that way we are very strong globally and here in India. Of course, here in India, we are also a SEBI registered portfolio manager, and that is what we are going to talk about today. Yeah, so I do not want to bore you with what is PMS and the features, salient features, how is PMS different from other products that are available. I will today talk about how is Phillip Capital PMS different from my competition. Okay. So when we started our PMS, we were very sure, though we operate under the large umbrella of Phillip Capital, we wanted to run our PMS as a boutique house. Why? Because PMS is supposed to be boutique in nature. Yeah, the minute you achieve a scale, and in India, I think scale is one of the largest kind of hindrance to client returns. Yeah, there are dime a dozen examples on the mutual fund space or even on the PMS space. Once you achieve a certain size, then clients performance and service takes a very backstage. Yeah, so that way we have decided that we'll always be boutique in nature. Yeah, the second thing that how we are different is access to global research. Yeah. So sitting here in India, okay, so we sometimes, of course, nowadays with WhatsApp and Google and everything, you get to know a lot, but you get to know a lot about on ground level realities as well when you have global colleagues as well. So my colleagues sitting in US helped me in 2016, 2017 when a lot of pharma companies started having US FDA issues. So we are able to call 2x US FDA inspector out here in India to explain us why suddenly all of them are having a problem, how soon they can come out of it. Okay. Or my colleagues in China helped me during 2018 and 2019 phase, wherein a lot of chemical companies were getting shut down in China and a lot of production was shifting here in India. So my analysts could travel to China to understand what kind of companies are getting shut down, what is the repercussion, how India would be benefited. So that time we invested into a stock called as GMM Fodler. Okay, we are very fortunate to invest it at the right price. And today, of course, we sold it at also at almost around 7 to 8x kind of returns in GMM Fodler. Or my colleagues in Europe keeps on giving me information what is happening at the European economy. Actually, Europe has been a quite a way revelation. Yeah, people had expected that Europe would be going into much deeper recession and much sooner, but till now they have kind of shown a lot of resilience. So this all kind of information we kept on getting from a analyst out there, because Phillip Capital Group has offices across the globe. The third, I think, is the differentiated products that we offer. Of course, we have got our standard products, a multi-cap portfolio, a mid and small cap portfolio, but we are the only ones to offer a Sharia compliant portfolio or a completely customized portfolio wherein we can do bonds, we can do mutual funds, we can do a combination of both. In fact, we have recently launched a debt PMS as well, and we would like to come again on PMS Bazaar platform to maybe one day to take that topic as well. We have another very interesting product is called as Global PMS, which is based out of Guest City. So wherein instead of investing into Indian securities, we invest into global securities. Yeah. So again, that is also something very unique that we have. So that is what. So it is completely differentiated products that we get to you to offer you an opportunity to participate in many ways in this story. Okay. Now, of course, we follow this four square paradigm kind of thing. Yeah. The USP for us is, yeah, and I'm sure that most of you would have invested into other PMSs or would know about how other PMSs work. So one thing that we are very, very sure is we do not have a model portfolio concept. We try to customize each of the client's portfolio based on when he's entering, what are the valuation at those levels, what stocks that we want to buy at those valuation. See, of course, model portfolio concept is more akin to like a mutual fund. Okay. But in PMS, that's the advantage that we have. Okay. So that's why no model portfolio concept. So a client who has entered maybe 2 years back and a client who is entering today, their portfolios will be different and has to be different. Okay. And that's the advantage of a PMS. Yeah. Just for my scalability or something, we do not want to run a model portfolio concept, because then client returns, client who's entering today, okay, if I buy the same set of stocks what I was buying 2 years, 3 years back, maybe his returns won't be that great. Okay, so that particular client is going to ask me after 6 months, 12 months, 18 months, Nishit, I gave you money, yeah, looking at your past performance, but what I have not made any returns kind of a thing. Yeah? So that's why this is something we follow very strictly. Second thing, maybe which is a little bit more debatable than the model portfolio, is staggered investment approach. We do not invest everything on day one itself. We'll take our time to build a portfolio. For clients who have invested with us maybe 1 month, 2 months back, we are still sitting on some bit of cash. Yeah. The idea is not to try to time the market. No one can time the markets, especially we at Phillip Capital, we cannot time the market. But at the same time, we understand what is the rush. Okay. We ask investors to give us 5 to 7 years kind of an investment horizon. And does it make sense to invest the entire client money on day one itself in a model portfolio? The answer is no. Okay. So that is why we stagger the investment approach. Of course, if today Nifty was not 19,800, if it was 8,000, we would invest everything on day one itself. Yeah. But when we know there are certain question marks wherein valuations are not comfortable in some of the stocks, so we take our time. The third thing is we follow very strict discipline approach. Of course, we do a lot of research before we go ahead and invest. Yeah, as I told you, we have a 25-member research team plus a PMS fund management team plus a fund manager plus an investment committee above us, kind of a thing. Yeah, so we follow very strict discipline approach. Yeah. So we go and meet the managements, we go and meet the competitors, maybe an auditor, an ex-employee, a supplier. We try to do all these things. But trust me, guys, after doing all these things, also that maybe out of 20 stocks that we buy, maybe out of that 2 or 3, we might go wrong. The idea is to accept your mistake, yeah, that we have gone wrong on this stock, sell off that stock and shift to something else. Okay, so that is what we mean to say. In fact, our investment philosophy, the main mantra of our investment philosophy is hold on to your winners for the longest possible period of time, but sell your losers immediately. So we have sold dime a dozen stocks in last 7 years since we have started. Yeah, the most recent ones that I can think about were Inox and VIP bags. Okay, we had bought these stocks in 2019. Both were great companies. Yeah, Inox, which manufactures travel luggage bags, and VIP, which manufactures travel luggage bags, and Inox, which is into theaters. Yeah, movie theater. So we had invested into the stocks in 2019, but come 2020 when COVID hit us for the first time. Okay, we immediately sold both the stocks. In fact, we sold both the stocks at some bit of loss, maybe 15, 20, 25% loss. But we are very sure that these were the industries which would be one of the last ones to recover. So by selling this, we got into certain IT companies and we recovered those losses. So that is what I mean to say. Generally, what an investor does is they hold on to their losers and sell their winners. Okay, वो 20% ऊपर जाता है तो बेच देते हैं, पर वो 20%, 30%, 40% नीचे जाता है तो पकड़ के रखते हैं. इनफैक्ट worst on, they keep on averaging those stocks. Okay, so we have got so many examples: Reliance Communications of the world, Aban Offshores, yeah, so many of them, yeah, JP Associates, wherein clients kept on holding on to it. Worse, they kept on averaging it, and that is where kind of thing they made huge losses. Yeah, so for us it is different. So Tata Elxsi we bought at 600. In fact, that particular stock we waited on for almost 4 years without any returns, but we are very sure because the fundamentals of the company was improving. They were getting a lot of orders. Okay, so we kept on holding on to that stock for a long period of time, and finally and suddenly in 2020 21 that stock went up from 600, 700 rupees to maybe 8,000, 9,000 kind of a thing levels. Yeah, GMM Fodler, Grindwell Norton, yeah, Honeywell Automation kind of a thing. Yeah, KSB Pump. So these are the kind of stocks wherein we have hold on for a long period of time and we have made decent returns for our investors. So that is what I mean to say. Hold on to your winners for longest possible period of time, but sell your losers immediately. I know it is a very painful decision sometimes to sell in a loss, but that is what how you will be making money. The fourth thing, again, which is very different from how we operate from our competition, is there's constant handholding from the fund management team. Okay, of course, there's a relationship manager associated with you for any of your servicing needs and all those things. But for you as a partner or you as a client, there's a constant fund management access. Yeah, because what we understand, this market is also about client expectation management. When the going is good today, okay, everyone wants to invest into small and mid caps. When we were shouting on top of our voice in January 23 and February 23 that this is a good time to invest into mid and small caps, so no one was willing to hear us, kind of a thing. Yeah? So it is about client expectation management. At top, they want to invest more. At bottom, they will want to, in fact, withdraw. So that's where there's a constant fund management access in our PMS as well. So this is how we have structured our PMS, our investment philosophy. So now I don't want to bore you guys a lot with what we do, how is investment philosophy and all those things. I think now what we are shifting onto is what are the next big themes that we can look at in next 5, 7 years, 10 years, which will help us all to make decent kind of return. Again, of course, you guys need to do your own research before you go ahead and invest into any of them. Yeah, please do your due diligence. Please do not try to pick up one or two stocks from a portfolio of 20 companies. Yeah. So try to avoiding that. Okay. So today, of course, I would like to start with by addressing the elephant in the room. What is a market view? Yeah. Today, everyone is talking about market views that are almost, yeah, we are again back to 19,900 almost. Yeah. We went to 19,200 and back to almost 19,900, and we are in touching distance of all time high. So people are worried. Yeah. That is it a good time to invest? Should we invest into mid and small caps? Everyone wants to invest into mid and small caps, actually. Okay. So what if you go to see the post Russia Ukraine? I think the tension started in September, October 2021. If you analyze that period till March 2023, okay, markets behaved in a very strange fashion. Okay, at index level kind of thing, we are flattish, but the broader markets corrected a lot. So if you're not in the right set of quality companies, your portfolio would have gone down by 15, 20, 25%, wherein market was maybe 2-5% plus in this period. Okay, so there was a lot of wealth destruction, and in fact, a lot of new investors who had come during COVID. For them, this was the first period wherein they saw losses and wherein their patience was tested. Okay. And but the exactly opposite happened from April 2023 till date, wherein market has seen a very big uptick, especially the broader markets. So in this phase, everything has done well. Okay. So I always keep on saying that, yeah, in this phase, everyone is a fund manager. Yeah, you would have picked up anything and that stock would have done well, kind of a thing. So in fact, गधे घोड़े सब भागे हैं. Yeah, in this phase, April 2023 till date, everything has done well. Mid and small caps have done very, very well. Yeah. And that is where I feel that there is a challenge. Okay. As I told you, everything has done well. I think from here on, it would be more of a selective rally, maybe for next 3 months, 6 months, 12 months in the mid and small caps. People will start distinguishing between an order book rather than what is at the bottom line, what are the cash flows. Yeah, because if you go to see the premium that mid and small caps are enjoying, are at a peak. So I'm not saying that we might see a crash or something, but there might be a sideway kind of push in mid and small caps. But large caps are a different phase, especially stocks like IT stocks, banking stocks, one of the largest diversified companies in India. I think that is where their value is emerging, pharma, specialty chemical companies. So that is where value is emerging. You might not make a lot of money in maybe next 3 to 6 months, but this would be a safer place to be in as well, and selective mid and small caps. Yeah. So that is, of course, again, we have a very big event coming in May 2024. We don't know. Okay. People keep on asking me, Nishit, what is your view on who will win in 2024? So I always keep on telling everyone this, yeah, that to predict stock market is difficult, but to predict politics is impossible. Okay. But what we have done an analysis of what happens during election phase and what happens after election. Okay. So we went back 25, 30 years and we kind of studied data points throughout this thing. So in this last 25, 30 years, we have seen multiple governments. We have seen Congress, we have seen Congress plus left, we have seen a third front government, we have seen BJP plus someone. Last year, of course, BJP itself was in majority kind of thing. But all these phases, the market volatility lasts maybe for a couple of months at max. After that, the fundamentals of the companies take over, of the country would take over. In fact, if you guys remember, okay, in 2004, when Congress came in with support of left, market had hit a down circuit. But after that, the next 5 years was one of the best years, kind of thing, and people still keep talking about that bull market kind of a thing. Yeah? So I don't think so that it will play a very big role. Of course, you need a stable government at center. That is essential. Yeah, but who comes in, I think that volatility would be very short-lived. The fundamentals of India in such a good place. Yeah, I do not see an issue for next at least 8 to 10 years, the kind of wealth that would get created. Okay. So of course, everyone has this question, what to do now? So we always say, please invest with at least 5 years kind of a view, especially if you're investing into mid and small caps, have a longer term view than 5 years as well. Okay. Be selective where you're investing. Don't just go beyond what is our order book where anyone is getting or what is the what is the news flow in that. Rather, please focus on cash flow, PAT growth. I think that is very much important kind of thing. Okay. Try to focus on the management quality. What is the balance sheet strength? I think that is the area that one needs to look at. So if you invest into the right set of stocks, then I think you can ride this volatility which is expected in medium term to short term. Of course, if you do not understand, the good amount of investment advisors, wealth managers, PMS providers like us, you can always take our services as well. So now moving on to the themes. So okay, I've got one more slide. So we did an analysis. So this is again a very interesting analysis that we have done. Okay, we have named him the unluckiest investor. What would have happened? Okay, if you would have invested at the peak of the cycle in last 20 years. Okay, so we have taken data from 2002 to till date. Okay, so if you would have invested at the peak of, to be precise, returns. Okay, so that way we have taken data points for each one of them. Okay, what would have happened if you would have invested at the peak of the cycle? Okay, so if you go and see the average returns at around 10%, even if you would have invested at the peak of those cycles, kind of thing, yeah, which is much better than what your FD rates are. It is only that in equity markets, I see this practice that people want to view the statements on a daily basis, the price movements on a daily basis. But when we invest into gold, when we invest into real estate, or when we invest into FDs, we don't look them on a daily basis. Okay. So even if you would have, let's assume this is the peak, but even if you invest right now, you would be still better off than your FD returns, kind of a thing. And that is what I mean to say. No way we are close to the peak. As I told you, next 8 to 10 years are going to be great for India. Okay, so do not worry about that. What you need to main worry more about is the kind of stocks, the kind of sectors that you are investing into, and that is where your worry should be, rather than what is the market levels and what are the macros and everything. Yeah, so that now moving on to the key themes driving the next leg of growth, we feel that this particular themes would be the offer good opportunity. Of course, there are many other themes as well which would do well in next 5 to 7 years. These are some of the themes that we feel would do well. So for the first one is premiumization. I think this is clearly a very big theme that is shaping up in India because of formalization of economy since GST has come in. Yeah, I was just looking at certain data on the income tax returns filed. Yeah? So there were around 2.7 lakh returns filed which were above 1 crore. Okay. So 2.7 lakh people who had an income above 1 crore who have filed their returns. This is, remember, this is 50% more than what was in FY19. Okay. So there's a very big move. And it is not only the rich. Okay. It is everyone has moved up the curve. So actually, when I talk about premiumization, people say a mehenga mal. Okay. Actually, premiumization is not that. It refers to added value of a product. However, it does not directly translate only as more expensive products. Okay. So sometimes, yeah, so when a McDonald's comes out with a burger or a chatpata naan, it does not mean it has to be expensive. It is something which is maybe unique, kind of a thing. Okay, or it's time saving. Okay, maybe airlines. We are just looking at certain data on the railway passenger numbers and airline numbers. Railway passenger numbers, in fact, is slightly coming down, and airline passenger numbers are going way above. So if all of us travel by airlines, if you go to any airports, they're full. The security lines, even during vacation season, that is the summers or the winters, you go to see the airports are jam packed. Okay, so that is what people are trying to save time. So that is again premiumization. Okay, so by train you could have maybe traveled from Bombay to Delhi in a Rajdhani at maybe around 2,500, 3,000 bucks, but in a plane it might be 4,500, 5,000 rupees ticket, but it saves your time. So kind of that is why you want to that is the premium that you are ready to pay. Safety and security, again, something like an example, vehicles with airbags, okay, or health benefits like something like a Maggie with Atta Maggie noodle. Okay, again, I'm not saying it is safe. It is a healthy kind of a thing, but it is supposed to be relatively more healthier than what the normal Maggie might be. Okay, so these are the kind of premiumization theme that are going. And again, it is not only for the people think that premiumization is only working at a certain level. Okay, it is not actually. All of us are moving up the curve a little bit. Okay, if today I was just reading, I still sometimes use a Renault pen kind of a thing. Okay, and between there was news that it might close down and something, but that was not a true kind of a thing. Yeah? But people have, so today I have a couple of Renault pens, but I've got some couple of better pens as well, and all of us have moved kind of thing. Yeah, so I see my kid's compass box, what I used to use and what he's using, there's a drastic difference. So all of us have tried to move. So this is a very big theme. I think that is going to go on for the next, I don't know how many years. So that is the demographic dividend of India that is going to play very well, kind of a thing. Okay. So what are the driving factors for this premiumization? Okay. Growing middle class in India, as I told you, yeah, the middle class, that the bulge of that middle class is growing, and they've got aspirations, kind of a thing. Increasing sophisticated consumer tastes. Yeah, so today, yeah, our tastes have gone up. Yeah, earlier we were fine with a normal phone, but today everyone wants a Apple phone or some other phone, kind of a thing. Okay, there's been a demographic shift, including urbanization also leads to a lot of premiumization. Yeah, because once you stay in maybe a tier 3 in the city or a tier 1 city, your tastes are going to be better. Your availability of those products and services are better in an urban area. Smaller household size also pushes you to premiumization. Delay in marriages, so you save more, you want to spend more actually. Okay. Of course, then there's been a technological disruption. So internet, smartphone, yeah, all this has also led to will increase in premiumization. Another thing, it is actually this data is very important, kind of a thing. Yeah. So if you go to see in all the other emerging economies or emerging economy, when the per capita crosses 2,500 crores, every incremental addition to your income will be spent on premium goods and upgrading of the lifestyle. Yeah. So again, yeah, every incremental addition to your income will be spent on premium goods and upgrading of the lifestyle. So that way we have just crossed that number. Okay, so there's a very big leeway that we have. I don't want to compare with things like in India, out of only 100 households, 10 households have got air conditioners, US has got 70, 80. But my point is not that we are never going to reach to 70, 80. But even from that 10, if we go to 20, 25, it's a very big jump, kind of a thing. Okay, and that is where I feel that this particular theme is going to play, kind of thing. Okay, so we have also got some examples for you. Okay, when my team came up with this example, I was also very surprised. Okay, the first one is there's a listed company called as Ethos. Okay, they came up with this Jacob and Steel Epic X price at 26 lakh rupees watch. Okay, and all the 11 pieces were sold within 36 hours. Okay, so 26 लाख रुपए का घड़ी, okay, 36 घंटे में बिक गया, yeah, kind of a thing. Okay, or in between, of course, there was this big news of DLF sold inventory worth 8,000 rupees, 8,000 crores within 3 days. Okay, in fact, initially, what I remember, they only wanted to sell 2 million square feet, but eventually, because of the demand, they kind of launch a new project and they sold 4 million square feet within 3 days. Okay, so that is huge. Of course, premium motorcycles, you see any data points. Okay, SUV from a mere share of 5% in 2002, today it is almost closer on 40-45% kind of. So everyone wants to own an SUV, kind of a thing. Yeah? So that is what I mean saying. Yeah? So this theme is going to be play. There are many plays. So don't only look at companies which are something like an Ethos or something. Everything. So suppose something like a Polycab is also a premiumization play. Okay, anything, a McDonald's is also premiumization play, kind of a thing. Okay, so that is what yeah. So this theme is going to play out for a long period of time. You just need to find the right set of companies led by good managements, and I think this will help you guys. The another theme is the manufacturing theme. Okay, so this is wherein in fact we have also have a lot of weight in our portfolios in this particular theme currently. I feel the capex cycle in India has picked up after a long time. If my memory serves me right, I think it is only post 2008, 2009. I think the capex cycle has picked up after a long period of time. So, guys, what happens when the capex cycle picks up? It benefits the entire strata of the population. Okay. See, when only service sector is doing well, so suppose when banking does well, or maybe IT as a sector, I am not talking related to markets, but when technology or banking does well, it only benefits a certain set of people. Okay. The white collar people that we say. Okay. But when your capex cycle picks up, right from the smallest of the guy to the richest of the guy, it benefits all of them. Okay. And whenever capex cycle picks up, it goes on for next 7 to 8 years. So many people keep on asking me this as well. Okay, Nishit yaar, itna sara ye capital goods, it sab chal gaya now. Is it a good time kind of a thing? Okay, so I always keep on telling that this is just we are all just at the start kind of a thing. Yeah. And there's a very long way that this particular sector can do well. Of course, there are many good companies also in this sector, but again, we have to be very careful because there are more bad companies in this sector than the good companies. Okay, so that is one thing that we all of us will need to be careful kind of thing when selecting companies from this particular sector. uh, so of course there are many things like EMS is doing quite well right now because of government policies like PLI, PMS, PEX. Yeah, there's a significant cost arbitrage between us and the Western world. Better maturity of infrastructure. Today, of course, we have got better infrastructure. There's China plus one playing at certain levels. Yeah, there have been good rules as far as ease of export, good talented workforce that we have, and that is where I think this particular industry and subsector of the manufacturing might do well. So in fact, India's share in the global EMS industry is expected to reach to 7% by 27 from just mere 2% in FY21. So there's a lot of scope. All the companies that we generally talk about are going to grow at 30, 40, 50%. Yeah. So of course, till now, we have not invested into any of those companies because we are not comfortable with the valuation, but we are looking at few of them. Okay. The another subsector into manufacturing, wherein I think a lot of value is emerging. Again, as of now, we have not invested into any of them. We are just evaluating few of them, and maybe shortly we might have got invested into as well. One is the specialty chemical sector. I think specialty chemical after China opened up, okay, the prices went down drastically, and that is where the Indian chemical companies suffered kind of thing. But I think a good amount of value is emerging in this sector. Again, we'll have to. So this is the time. See, when the tide is down against you, you come to know which are specialty chemical companies and which are only chemical companies. Okay, so this is where I think this particular sector, subsector of also manufacturing is likely to do well. The third one is, of course, the capex capital goods. I think this there are so many good companies in India. Yeah, kind of thing. Yeah, also try to focus out here when you're investing. Of course, in large caps, you get diversified companies, but in mid caps, you will get very good companies which are very boutique in nature. Yeah, they have their own niche, and because of certain changes, kind of thing. Okay. They are going to see a very big jump in their revenues and profit numbers and cash flows. Yeah. So manufacturing theme is something that we need to look at. Okay. Of course, BFSI. I think the Indian BFSI space is in a golden era. Okay. Of course, retail loans have grew from at a CAGR of 25% from March 21 to March 23, almost double the CAGR of 13% what we have seen before. Okay. The NPA ratios have fallen from 11.5 and 6.1%, yeah, to just 3.9 and 1% in March 23. So this, okay. So I do not see an NPA cycle at least for next 2 to 3 years. I see this growth continuing because again, everything is helping. Yeah, the manufacturing, the capex cycle, the export oriented. Okay, everything is helping in this growth. So if I have to, and if anyone has to participate in India's growth story, I think BFSI is one of the easiest one to pick up. There are there are very few bad companies in this particular sector. Of course, on the NBFC space, you might have to be careful, but as far as banking is concerned, there are very good companies out there. Okay. Next 2 to 3 years, it's a clear cut roadway for all of them to do well. Okay. Valuations are also not that expensive, especially if you see in the large cap space. I think they're at a reasonable level. So this is another theme that we one can look at. The last one that I wanted to talk about as a theme is the digitization theme. Okay. So, during the last 9 years, the number of digital transaction in India has increased from mere 127 crores in 13-14 to 12,700 crores transactions in 2023, which is over 100 times increase. Yeah? 100 time increase. Yeah? Of course, this is UPI, digital payments. I think all of this has helped. And this, what is helping? See, of course, there's no play as far as digitization is concerned. But a lot of BFSI company, a lot of new age companies are using this digitization to grow their business. And I think that is where the opportunity lies. If you go and see, there's no as such play in the digitization theme kind of thing in India. Okay. So this is a kind of a, what I should say, an enabling factor for many other kind of sectors kind of thing. And this is again going to grow kind of thing. We are again looking at the numbers globally. I think India, as far as digitization, especially in financialization is concerned, we are way, way ahead kind of a thing. Yeah? So yeah, so these are the themes that one can look at. Now, I just wanted to cover our three portfolios that we are actively managing under PMS. The first one is called as Phillip Signature India Portfolio, which is a classic multi-cap portfolio. This is a flagship strategy which we started in 2016. Okay. Of course, thanks to PMS Bazaar, which was powered by Crisil. Since last 2 years, they have launched the awards. This particular strategy has been getting awarded as one of the best performing multi-cap strategy. And it's a classic kind of mixture of large caps, mid caps, small caps. Okay, more track record of more than 7 years kind of thing, consistent performance across everywhere. I think our investment philosophy of no model portfolio and staggered investment approach has helped this particular strategy in a very big way. Okay. Right now we are close to around 40% large caps and around 60% mid and small caps. We are changing the dynamics a little bit. We are going a little bit heavier in on the large caps and decreasing our weight to mid and small caps kind of a thing. The second strategy that we have is called as Phillip Emerging India Portfolio. This is a classic mid and small cap portfolio. Yeah. This we had launched this strategy at the peak of the previous mid and small cap bull cycle in 2017-18. If you guys remember, January 18 is when the mid and small caps had peaked out. Okay, so this particular strategy was launched then, but you would be surprised since we just completed 6 years of this particular strategy. Again, the best performing strategy in the mid and small cap space as far as performance is concerned, all of the parameters are concerned. Herein, I think our strategy of not investing everything on day one itself, staggered investment approach has helped us. I still remember in 2018, there was a time we are sitting on huge cash, 35-40% cash in the portfolios as well. So client used to call me, Nishit, why are you sitting on so much cash? We have given you money to invest, but we are very sure, yeah, that if we are not comfortable with the valuation, yeah, we are not going ahead and investing. See, what if someone has to generate 20% returns? If your 100 rupees has to become 120, but if that 100 rupees become 80 rupees, then you have to generate 50% returns from 80 to 120. Okay. So that is what for, see, when the first thing that anyone is investing with us, we do not want any permanent wealth destruction for the investors. Yeah. So that way with us, you will have more consistency of return, but we are very slow and steady kind of thing. Okay. In fact, our outperformance, major outperformance comes during the bad periods for the markets rather than the good periods of the markets. Okay. So we are very conservative, especially when it comes to mid and small caps. So we do not invest into many stocks and many sectors. Okay. I keep getting asked this question a lot of time, Nishit, where to invest? The first thing, in fact, we decide is where not to invest. Okay. So as a philosophy, again, some of you might maybe argue because those couple of sectors have done well. We do not invest into any PSUs. Okay. We do not invest into any cyclicals. We do not invest into hotels. We do not invest into airlines. We do not invest into companies which have got high debt. We do not invest into companies wherein which are led by bad managements. Okay, and many other criteria that we follow. I am not saying this is the only way to make money. Every one of us will have their own circle of competence. This is what we think has worked for us over last 7 years, 10 years, kind of things. Personally, for me as well. So that is what we feel. That is how we curate the client's portfolio as well. Yeah. So everyone would have a different strategy. I know many investors have made a big killing in PSU stocks in last 6 months, kind of a thing. Yeah. But that is investment strategy for everyone. Yeah. They would have gone through the big pain from 2008 to 2023 as well. Okay. So now, yeah, so it is everyone has their own style. No one is correct 100%. What we need to focus on is our circle of competency, kind of quality of stocks that we invest into. So we take it as a personal responsibility when we are investing for any of our investors. Yeah. So that's why we try to stay invested into quality stocks. See, the client returns are not in our hands because it depends upon markets. What is in our hand is to stay invested into good quality companies, which we are know would do well in long term. So of course, Phillip Emerging India Portfolio, we invest around 20 to 25 cherry pick mid and small cap stocks. Yeah. And right now, I think capital goods is one of the highest sector in this particular strategy. The third one, which is again very unique, is Phillip Ethical India Portfolio. It's a Sharia compliant portfolio. Again, I am no expert on Muslim law. So what we have done, we take help of Sharia scholars out here, kind of thing, to invest into the right set of companies. Fourth strategy, which I have not mentioned here, but again, which we do, is a completely customized portfolio. Yeah, wherein we can talk to you at the start, kind of thing. If you want us to invest into fixed income products, if you want us to invest only into blue chip companies or only mid and small cap companies, we can curate the portfolio while discussing with you at the start. And as I told you that we have maybe a few days back only, we have launched a debt PMS, which is again very unique, kind of thing. We are one of the few ones who have got a debt PMS. Yeah, which is again, I think the yields that are there in that particular portfolio, I think it will do very well in next 3 to 5 years, and decent yield, double digit yields that we are talking about out there. Yeah, so of course we'll come back to you guys with more details on that particular portfolio, of course, or you can always get in touch with PMS Bazaar for any of your inquiries, or you can get in touch with us, kind of thing, for any of the queries. And of course, this is our disclaimer. Yeah, please go through the disclaimer once again. Yeah, please make your investment decision based on thorough research, kind of a thing. Yeah. So now open to question and answer sessions. Yeah, more than happy to take as many questions as you guys have.
Yeah, I must say that it is very candid and a casual PPT, I must say, because you had taken a lot of your personal experience as well inside this. So that gives a different one today. And okay, so let me start off with the very first question that I've ever wanted to ask since the beginning of this webinar. So of course, when you said the market is at all-time high, of course, and Nifty, and India has become an eye candy for FII now.
Yeah.
That's how it is. So how do you see this rally, Vigo? And you think it's going to continue, or do you see any break-even points?
So see, as of now, I do not see any reason for a crash coming into the markets. We'll have a small bit of corrections and everything, okay, but that is natural. Okay, we have seen a very big uptick from April till date. Though of course, I have my reservation. I do not see the kind of inflows that are coming not only from FIs but especially domestic investors through their direct plays and through mutual funds. I did not see anything negative happening in a very big way. Okay, of course, see, market, there's a crash in the market only because of an unknown factor. Okay, so if something drastically comes out of, वो बोलते हैं ना, syllabus के बाहर का कोई question आया, then only the market is going to kind of crash. Otherwise, I think we are in as of now not an issue. But of course, we'll have to be careful as far as where we are investing on mid and small caps, especially there.
And with saying that, because US have already hinted about a rate hike now.
Yeah.
So do you think India will be India cannot be an ignoring part? So BFI would definitely come to it. Do you think this is an opportunity now?
So see, as far as rate hikes in, we might see one rate hike in US. See, there the Fed is very clear. Okay, they have if they have to control inflation. See, here in emerging economies, we are used to inflation of 7%, 8% kind of thing. Okay, you Western worlds are not used to those kind of inflation. So if they have to control inflation, yeah, they have to get the economy into kind of a recessionary phase. But unfortunately or unfortunately, that has not happened. In fact, the numbers that have been coming from US, Europe have been kind of encouraging. Okay. But I see that this time around, maybe that recession, I don't know if it would be a soft landing or a hard landing. Yeah, that will for all of us to see that. I would not like to give it a name. But I think maybe after a couple of quarters, we might see some bit of softening in those economies. And then again, if that softening kind of story plays out, then there would be voices, okay, we want to get the rates reduced and everything. So I think we are at the peak of the interest rate cycle. I do not see much of an issue kind of a thing. India, I don't think so, might increase the rates. I don't know. But yeah, and that is as of now our view.
Okay, so let me take a question from the audience. This is Mr. Aman has asked, what does Phillip Capital philosophies regarding selecting the mid-cap stocks?
Yeah.
Are they into the sector rotation and select accordingly, or select companies with to potential to become a large cap?
Okay. So of course, we are more of a bottoms-up picker when it comes to mid and small caps. Okay. Rather than looking at sector rotation, we do not do. We invest for long term. On an average, our holding period is at least 3 to 5 years, kind of a thing. Yeah. So we are not into that sector rotation kind of a game. So very clearly, yes, bottoms-up approach. uh, we look at multiple parameters. As I told you, we do not invest into many stocks and sectors. Uh, we also look at what is a promoter holding, especially when it comes to a mid and small cap company, how passionate they are about, involved they are in the business. We recently invested a year back into an auto ancillary company, wherein the promoter is not actively involved, but he has got a professional kind of management in place, kind of thing. Yeah? They are kind of reasonable suppliers to Tesla's kind of a thing. Okay, almost around 25-30% of their revenue comes from Tesla. So we look at those kind of companies. We also look at many special situations when it comes to mid and small caps. So we invested into NBFC play 1.5 year back, which was earlier managed by someone else, but today it is managed some a very large family has bought over that stake, kind of thing. So we constantly keep on looking at special situations when it comes to mid and small caps as well. Okay. Of course, at some level, we also look at sectors. So suppose if we have to play capital goods and infra, okay. So we know that this sector is going to do very well. So which are the companies that might do well? Okay. So then we try to drill down in that particular segment, and then we try to find the right set of stocks.
Yeah, when you said that mid and small caps have become a new flavor in recent
Yeah.
times.
Yeah.
So like how has it favored your small and mid cap strategy, which is emerging
Yeah.
strategy, PMS.
Yeah.
How has it flavored it? If you could talk about returns and all.
Certain. So, of course, since April, that particular fund has done very well. We also got benefited because of the big upcycle that has come in the mid and small caps. I think from April till date, our performance would be what, 25-30%. I don't have the exact numbers in front of me, kind of a thing. Yeah, but the fund has done very well. Yeah, so we have beaten the benchmark by a good, not 1 or 2 5 percentage points, but very huge percentage points in April, kind of a thing. Yeah. So that way it has done well. But again, I think, see, in mid and small caps, we have to be kind of cognizant of the factor that we'll keep on getting this good phase. But at the same time, we also have to be very patient when the phases are not good. Okay. So what happens is that today everyone wants to invest into mid and small caps, but there's going to be a phase wherein maybe for 1 or 2 years. I remember when we had in fact launched Emerging India Portfolio, 2018, 19, 20 were the worst period for mid and small caps. Okay. Kind of thing. Yeah. But if you are patient, you will always get rewarded and rewarded big time. Okay. So that is what, but investors lack patience. Okay. So that is maybe one of the complaints that we have, kind of a thing. Yeah. That at start they say, okay, we are long-term investors and everything, but actually when it's the time for them to be patient, kind of a thing, it's something another story.
So add one point towards that is that these days investors are very fleet-footed. They want an exposure to debt as well as equity. So that's how they are. So moving on to
Sure.
the next,
Yeah.
that Mr. Suraj, in the era
I
where
think someone has mentioned about this. Yeah, someone has mentioned about GMM Fodler as well. Why you have exited GMM Fodler? Aren't they still a winner?
you
Okay.
want to take that?
Yeah. So okay, I will take up that question. Okay. Yeah, I'm glad that you brought up this topic. So it was a very interesting story, kind of a thing. So we invest into GMM Fodler because my analyst had traveled to China. He came back very confident that the chemical space is going to do very well. So that time we looked at all the chemical companies, but we are a little bit skeptical. Okay. Why? Because there are too many moving parts in a chemical company. What is happening in US, Europe, China, everything is good. But if your currency plays kaput, then again, the company is back to square. So then we looked at if so much of capex is going to happen in India. Okay, which is the company that is going to benefit? Yeah, so we looked at large companies like L&T, Siemens, okay, of the world, but for them this was a very small portion. So that is where we came across this company called as GMM Fodler, MNC, good balance sheet, but of course there was no growth because that particular sector was not doing well. But that is where we took the bet. So in fact, after we invested, maybe for next 6 months, 12 months, the stock did not do much. Yeah? And then suddenly it started getting a lot of limelight. Of course, the company's number were great and all those things. But then we made our returns as well. So we are closer on 6x, 7x kind of thing. Valuations were not in our favor. Too much of frenzy in that stock, kind of a thing. Yeah. And we felt that it is good. So sometimes what you also have to leave on the something on the table for the next guy. Okay. You cannot buy at the bottom and sell at the top, kind of a thing. Yeah. So that is where we decided to exit GMM Fodler. So we are very fortunate. We exited closer on 70 to 75% of the quantity, and then that news came out wherein they tried to acquire the parent, where they announced that they would be acquiring the parent company. That was the final nail in the coffin. After that, we sold off the entire quantity as well.
Okay, so I think the question is answered now.
Yeah.
We take the next question from Suraj.
Yeah.
In the era where everyone is buying the premium brand because of the increase in his personal income,
Yeah.
where do you see the future trends of the local products or small market players?
So as I rightly told you in my kind of presentation, so it is not only premiumization of it is more expensive and everything. That premiumization is playing at every level. So guy who was buying maybe a loose rice, okay, today is buying packaged rice. Okay, a guy who was buying maybe normal biscuits kind of thing today is buying Parle G, which is worth 5 rupees. Okay, so premiumization is playing at every level. So it is, I'm very sure all the businesses are going to do well. Okay. It is not only the likes of maybe when I take an example of a car company, it is not only the likes of Mercedes or BMWs that are going to, I think at the same time, a Maruti is also going to do quite well. Or the two-wheeler is also going to do quite well, kind of thing. Yeah? So it is not only kind of thing. So that is the actually kind of what I say, it's an issue kind of thing. Yeah? People have this premiumization, matlab महंगा. No, it is not that.
So, well, I think the question is answered by Suraj.
Yeah.
So, the next question is from Veeramai Rajashekharan. Have you ever been in a situation where you couldn't find the good business at right price?
Uh, if you can repeat the question, or maybe I
Have you
can.
ever been in a situation where you couldn't find the good business at the right time?
Yeah, so there are many cases like that. So what we try to distinguish between both of them. Okay, it can be a great business, but is it a great stock? Okay, that is what we need to answer. Say suppose for example Colgate. Okay, it's a great business. Okay, it's a great company. Okay, monopoly kind of a thing. Yeah, they have a mode, they have a brand, the balance sheet is very strong. Okay, but is it a great business for us to invest into? The answer is maybe no. Why? Because oral care industry in India is growing into single digits, and Colgate, in fact, is losing market share. And to gain that market share back, they need to spend more on their brands and everything. Okay, branding activity and all those things. Yeah? So though it is a great company, it might not be a great business. Yeah. So of course there are times wherein we don't find good businesses to invest into. Okay. Today also, I like many mid and small cap companies. I like a lot of EMS companies. Okay, but valuation wise, I don't like that. Yeah? So that is why we have to be kind of careful about. We have to distinguish between, see, because your biggest mistakes are actually not made in a bear market. Your biggest mistakes are made in a bull market. Okay, so if you make a mistake, yeah, in a bull market, you buy it at the wrong price. The stock might be great, but come a bear market, you lose everything. Okay, so that is what we need to be very careful about as far as investing into. So of course, when we are not comfortable, we are not liking anything, we are more than happy to sit on cash. Okay, so
Okay.
again, that is a advantage that a PMS has over a mutual fund kind of a thing. Yeah? That we can be 100% cash, we can be 100% invested. So if we are not comfortable, then we are more than happy sitting on cash.
So how aggressive are your cash calls are?
Uh, so as I told you, in 2018, we are as high as 40-45% cash in the portfolios. Currently, for clients who entered maybe a month back, we are 25-30% cash in the portfolio. We are not trying to time the markets through this cash cost. Okay, it's clearly, yeah. We in fact keep on saying that there's no point in trying to time the markets. Yeah, but there should not be any compulsion. Okay, कि पैसा दिया है, पैसा आया तो चलो कंपल्सरी टू मेक माय लाइफ सिंपल, लेट्स इन्वेस्ट. वो देखा जाएगा कि एक क्लाइंट जाएगा, दूसरा क्लाइंट आएगा. ओके, सो वी टेक ईच क्लाइंट एज एन इंडिविजुअल. वी ट्रीट हिम एज एन इंडिविजुअल क्लाइंट, however big or the small the sizes, and that is how we curate the portfolios. Yeah, so we can be aggressive as far as taking cash calls are concerned. But ultimately, our goal is to, of course, invest into good companies, and that is how we want to generate alpha. But you would be in the game if you are there in the game. Okay, if you lose 50% of your capital, then you are kind of out of the game as well.
Yeah, but when you say you're going to treat every client as very individually, so
Yeah,
when you say that you have three different PMSs now, so if
yeah.
an investor steps in, like what kind of an investor, what product do you pitch in?
Okay. So see, as far as in PMS is concerned, it is more on clients if they want to invest into Signature, which is a multi-cap portfolio, Emerging, which is a small and mid-cap portfolio. Of course, Ethical is for a specific set of investors only. Okay, so let's not talk about that. It is mainly this too. Okay, so again, it's a misnomer that when you don't run a model portfolio, you do staggered investment, it leads to a lot of work for the fund manager. But one thing is that we are getting paid to do work. Okay, so just for my scalability, it should not be the case that okay, client का पैसा पहला दिन model portfolio में पूरा invest कर लो. And many of them have suffered. So when we go and meet the clients, we have seen that they say that at the peak they invested kind of thing. Yeah, and today, so for us, as I told you, it is an individualized portfolio. Of course, once the client decides he wants to invest into multi-cap portfolio, then once he has decided, then we will be taking the investment decision. Okay, today we want to be 40% in large caps or 50% in large caps, or maybe we want to sit on 10% cash or 15% cash in the portfolio.
Okay, so with that, what does your exit strategy looks like?
Yeah. So see, we sell in case of two times. Yeah, in cases wherein we feel that we have gone wrong, that is a much more easier kind of a sell decision. Yeah. So suppose in case of a VIP or a Inox, as I told you, we felt that the thesis has changed and we have gone wrong. So those are simple decisions that we'll sell off immediately. Okay. In 2016, we had invested into a company called as Shemaru. Okay, one of the biggest content library in India, kind of a thing. Yeah, we thought that it would do well, kind of thing. But quarter on quarter, yeah, the numbers were not coming in. Yeah. In fact, on YouTube, if you go to see, they were number one player, number two, both their channels were amongst the top two, top three channels on YouTube. But surprisingly, numbers were not getting reflected. So for us, what happens? Research is also a constant process. We keep on. So we came to know that there's something that is not meeting the eye. So then we revisited that stock. We sold off that stock immediately in 2016 or to early 2017. After that, the stock has gone. Maybe today also there was some negative news regarding that stock. The stock has fallen down almost around 60 to 70% from those levels. Another example, yeah, Yes Bank. We had Yes Bank in our portfolio in 2016, 17 again. Okay. It was that time, it was part of the Nifty. Yeah. Uh, when they did the QIP failed. Mr. Rana Kapoor came on TV. He said something which we are not comfortable with. So we revisited the balance sheet annual reports. We found something was amiss. Of course, at that time we did not know something such. There was such a big hole kind of thing, but we are not comfortable when we sold that stock. In fact, after we sold off, the stock went up another 30% from the levels that we sold. But today it is. Yeah. So this is an easier decision. Yeah, wherein we feel we have gone wrong, we'll immediately sell. The difficult decision to sell is something like a GMM Fodler or a Tata Elxsi or a KSB or a Grindwell or a Honeywell, wherein the stock has done 5x, 6x, 10x for you, kind of thing. The results of the company are coming in good. Okay. But those are kind of difficult decisions to sell, kind of thing. Yeah. So again, in Tata Elxsi, we bought at 700, 800, we sold something at around 9,000 plus levels. Today, again, we are buying into that kind of company. But these are more difficult decisions because what is happening, not only your stock price has gone up, there's no reason apart from the valuation for you to sell the stock. Okay. So yeah, those are difficult decisions, and maybe some you get right, some you get wrong in this. But of course, you have made your money, and if you go wrong a little bit, that is fine. Okay.
Yeah. And let me take a question from the audience, Sriram. Do you consider a customer risk assessment while choosing a stock?
So see, at PMS level, what happens? The customer risk assessment happens at the start. Okay, kind of thing, and based on that, based on client preference, everything, we select a strategy for it. Phillip Signature India, Phillip Emerging India Portfolio. So once yes, then it is not on individualized stock. Okay, so this is not your broking or maybe something like an investment level, which is at the stock level. The risk appetite and everything is calculated at the start. Of course, in between, if client says we want to shift from mid and small cap portfolio to a large cap portfolio or a multi cap portfolio, that can be done. Okay, but it is not at individual company level. What we look at is at a more at a portfolio level kind of a thing.
Yeah. So let me take another question from anonymous attendee that he has asked. You said you won't invest in government companies, but last 1 year they're giving 3x returns. So what are your views on it?
So as I rightly said, in fact, yeah. So it's again, yeah. So all of us, it was a miss from our side, okay. But we would like to stick to our investment philosophy. As I told you, we all of us need to work within our core competency levels, okay. PSUs after 2008, it is only now after what almost 15 years that they have picked up, okay. Till date, in fact, after them going up 2x, 3x, there's still maybe some of the companies are still 50%, 60% down from those 2008 levels. Okay. So it's, of course, it's a style of investment. There's nothing right, nothing wrong. It is not our style of investment. That is what I would like to kind of say, kind of a thing. Again, if our portfolio had not done well, then maybe, of course, you would go back to the drawing board, what went wrong. But if your portfolio has also done well in this period, then you are comfortable, kind of a thing.
Yeah. So with the time constraint, let me quickly take the questions from the audience only.
Sure.
So next question is from the Veeramani. What investment strategy would you fail in? What investment strategy would fail in PMS investments? And what investment strategy would like to share with retail investors?
See, of course, in PMS, I don't exactly understood that question, but I think in PMS, a trading strategy does not work. Okay. We have seen, and that is where I think the PMS industry has also matured. Most of the players, majority of the players are more on the long term side. So I think something on the trading side would not work on the PMS because it is more of a then broking kind of a setup. Okay. So that is something that I can think of. The second part of his question was regarding.
Regarding what investment strategy would you like to share with the retail investors?
Okay, so for retail investors, as I told you, yeah, if the best way is to invest through mutual funds. Okay, if you want to do any direct stock investments, yeah, please consult investment advisors. Please consult people like PMS Bazaar kind of a thing. Okay. If you are doing your own research, try to stick to within your core competency. So recently, I met a retail investor. Okay, he's a doctor kind of a thing. Yeah, so he has invested only into pharma companies. Okay, pharma companies which he understands, whose products are good, kind of a thing. So try to start with that, and then maybe you can kind of. But वो बाद में morning पे walk पे गए, अरे इसने ये बोला, इसने ये बोला, ले लिया. Try to avoid doing those things. Yeah? So don't buy on hearsays. Okay. कि ये एक बड़े इन्वेस्टर ने ये लिया स्टॉक, चलो मैं भी आई विल ट्राई टू कॉपी हिज पोर्टफोलियो. इट डज नॉट वर्क काइंड ऑफ अ थिंग.
That was very true answer. So the next question is from Giriraj Jindal. Are you into value investing or momentum investing? Also, do you see any opportunities when it comes to corporate actions, change in management, and demergers, etc.?
Yeah. So of course we are more into, in fact, growth strategy and quality. Yeah. So we are neither into value, we are neither into momentum. Momentum, of course, we are not completely there. We are more into growth and quality. Sometimes, of course, we do take value bets as well. Yeah. So that is the first part of your answer. Second part, yeah, of course, special situation is something that we are aggressively keep on looking. Okay. Wherein there is a promoter change. Okay. Maybe the companies are getting divided into two pieces. Okay, so that is also, again, we look at a new second generation or the third generation is coming into play. Okay, we look at those kind of companies, kind of a thing. A large investor or maybe a strategic investor has come in, we look at those kind of plays as well. Okay, there's a huge dividend payout or maybe the open offer. These are not maybe actually special situations, but of course sometimes we do that as well. Okay, but I think majority of our recent special situations wherein we have tried to focus on either on a demerger or a management change.
Okay, so quickly let me take the next question, Mr.
Sure.
Pab. What will be the effect of G20 on India and the stock market?
So yeah, it's a feel good factor. Okay. At ground level, I don't know much, but I think India is getting popular globally. Okay. So this conferences like this helps wherein the heads of the states are here, kind of thing. It helps them to connect. See, because when they come here, it is not only to meet Modi or maybe, yeah, they will be meeting corporates and all those things. So that way it creates a kind of a good environment for us. It is like a marketing strategy for India. Okay, so that way it might help, but yeah, nothing as far as stock market related.
Yeah. Now, also, I request the audience not to ask any stock specific questions because I might not take that on air. So let me move to the last question today. It is from again from Anonymous Zatani. Is that if we see top six focus and flexi cap funds, they have not given significantly more returns than Nifty Total Return Index. This thus indicating that the excess returns provided by the funds is the same as the extra expense ratio charged. Thus, why is the Nifty 50 index not a best thing to do?
Okay. Of course, I'm no expert on mutual funds, so I would not know about the expense ratio and everything. But my bit on the is that, again, size is one of the biggest constraint in the markets. Once you reach a certain size, may it be mutual funds or may it be PMSs, performance takes a hit, kind of a thing. I don't know which strategy schemes that you are talking about. I have not looked at it. Sorry, but I think the entire mutual fund industry works on that 5-star rated. Yeah, once a fund is 5-star rated, everyone wants to invest into that. But I see a lot of change also now. A lot of mutual fund schemes have stopped accepting, especially on mid and small cap space. They have stopped accepting lump sum investment, which is a great kind of a thing. Yeah, because yeah, after a point you can't because then you'll have to keep diluting your investment philosophy, kind of a thing. Yeah, so I cannot answer your question exactly, kind of thing, because I'm not an expert on it. But yeah.
Yeah, so the last question for the day is that do you have investment freedom like fund managers? I didn't get that.
Yeah, so PMS, of course, there's complete freedom. Oh, yeah, we can, as I told you, we can be 100% cash, we can be 100% invested, we can be 100% large cap, we can be, of course, but we are ruled by certain guidelines. SEBI is very strict as far as regulations are concerned, and we for a player like us, a large player like us who follows every rules and regulation, it is a welcome move kind of a thing. Yeah, so we follow those kind of rules, regulations, the investment philosophy that we have for a particular fund. But of course, PMS does offer a lot of flexibility as far as investments are concerned to the fund manager.
Yeah, thank you. With that, we've come to the end of the session. We're
Yeah.
already 8 minutes away from the time that we mentioned, but it's still fine because the questions and answers, it took a bit longer time than usual because it was very interesting, I must say. And thank you.
So I try to be as candid as kind of with everyone. Yeah. So because that is our style, yeah, kind of thing. We try to connect with each of the investors, with each of the partners, and that has helped. And that speaks why you guys have given us an award as well, kind of thing. That's it is because of our consistency and the way that we run our business. Yeah.
Thank you all.
Thanks. Yeah. Thanks again, everyone. Yeah. Thank you.